Hey, what's up you guys? This is Junior Trader, and in this video we are taking a look at the market. The destruction of the market, guys, that's what we are taking a look at in this videos. S&P 500, Nasdaq, Microsoft, Apple, Meta, Netflix, Google, and Amazon. Let's go through the list here, guys. Now, before that, I actually want to show you my new tool that I have been talking about if you have been seeing my videos that takes position both on the long and the short side. This is on S&P 500. The data you can see positions taken on both sides, and we are net profitable, long and short both. Based on the, if there's a long and short, and accordingly it's the how the day finishes in what P&L is. The data is on the left side of the table, and this is on QQQ, looking great. And again, there are settings you can set in the indicator and whatnot based on how much position you are calculating this data based off of. Again, these are educational tools, guys. Just use them at your own risk if you prefer, and if you need access to them, links are in the description below of this video. This is Apple. I'm just picking and showing you some of them here real quick, and this is Meta also. So again, taken like yesterday was a good profitable upside position. Today, first one, again, you take partial profits if you can, like manually as well. If you see consolidation, just get out, right? But again, this is the data that I'm showing you based off of completely by the tool. You can still optimize by manually doing an intervention manually if you like, but again, I'm just showing you the data what the bot has done. We picked up a short position, really great money made then as well right today on Meta. Again, just showing you the data here, guys. And as I said, if you need access to these tools, links are in the description below. I have 5 tools, and that's that. All right, now let's go back to our technical analysis. So let's start off with SPY. So SPY, S&P 500. Now, what I was talking about and have been from last couple of days, especially this significant level marked by my indicator as well, and I have highlighted that with a red horizontal line on top because it's such a critical level that if SPY is not able to close a day above it, we are not out of the woods of this potentially being a head and shoulder. If SPY continues to close below 524 and consolidates here and then finally loses 200 days moving average, guys, this is turning into a head and shoulder, and on S&P 500, that's a very bad thing. So yeah, we are still in a dangerous territory, right? Now, going to the hourly interval over here, we are intraday also very weak here, guys, right now. This thing tried to go up today and it stayed above. Like, this is what I was talking in the morning as well. If SPY can stay above 524, that's a good sign. We got some move today, but then that was it. And then it's just a whole day is just a sell-off, right? We lost 524, got to the next significant level, 518, and still plummeting lower. At this point, tomorrow, I mean, sure, intraday rebound is only possible if we get above 518, but then 20 and 50 hours moving average is a point of rejection. And yeah, below this 518, just, 510, just watch for that. And I won't be surprised if tomorrow we test 510 again. So just keep that in mind for SPY, all right? So yeah, it's not looking good. It's a lot of weakness here, guys. QQQ, wow, yeah, QQQ couldn't even go above the significant level of the area, this marked by my indicator as well. I have highlighted, just like on SPY, this critical structure with the red horizontal line. And if QQQ at this point, guys, looks like a head and shoulder, right? Only thing that can save QQQ now is if it can find a pivot at close to 200 days moving average and starts to make its way higher. That's the only thing that can save QQQ now. Otherwise, no. This thing can go really bad. And right now, I'm not seeing any bullish structure. So let's see if the pivot forms here on QQQ. All right, that would be the only savior for QQQ. Let's take a look at hourly interval as well. Similar to SPY, guys, but it's just lost the pivots already, lost this level as well. Yeah, right now, it's not looking good. It's below 20 and 50 hours moving average as well. So even intraday rebounds, likelihood of them is just very weak, and this thing can just continue lower. There's just too much bearishness right now on QQQ as well. Microsoft at one point was above 200 days moving average. That was really good, but then it just closed below that. So structure still remains fully bearish. and technicals are not confirming upside. You can see rebounds are still being just sold off. Right now, I'm not seeing any pivot on the overall structure that tells me that we are going to start going higher. No. If any pivot has to form, it has to form above 388, and then we have to see a level break to the upside. That will be a pivot confirmation, but until then, no. And even on the hourly interval, yeah, wow. If you stay below 397, it's just a downside play tomorrow as well. Still very weak right now. Apple. Apple Apple is staying strong. I showed you my bot data as well on this, right? And but is it strong enough? Can it continue up here? Well, it's holding this trend line that I provided you, right? This is a quite a significant trend line. A lot of pivots on this sitting from quite a long time. Maybe if I take it to the weekly interval, it's gonna get much more clear. Yeah. So you can see it's trying to hold this pivot line, right? This is a significant weekly interval line, guys. So it's after breakout is trying to stay above that, and it's also found a support at that significant area of the previous two double tops, turning now into a support, and you can see it's finding the support here. So Apple still structure is good, it's not bad, and yeah, so Apple is the only strongest one sitting right now, guys, in my opinion. And let's take a look at intraday levels. What is the potential on this thing? I would only want to trade it long at this point if it first get above 20 and 50 hours moving average, but then 211 and above as well. But yeah, if it can get above 20 and 50 and also this level like 209 and 89 cents, some upside is possible. Otherwise, no. This thing can again test this bottom of this trend line or areas like 206 and 64 cents. Yeah, but this could have been really bad if Apple was also really bad right now. Market would have been then really bad. All right, here we go. Meta. Meta, guys, it has been range bound choppy, and this is where I say just trade on the intraday then, on the hourly interval. For Meta is what I want to look at. I showed you the data already on my bot. It's profitable. On now it takes long and short both, right? And since we lost 495 and 3 cents area, that was a potential savior on this, but since we lost it, you can see a retest rejected that right at that level, significant level, and it's selling off. Yeah, right now this thing is not looking good as well. The thing is that it's above 200 hours moving average, but market is selling off. So in this cases, I would just avoid trading it because there are two mixed signals. If it comes down to 200 hours moving average, you can see if it finds consolidations here, pivots here just like before, and then you can try to play it upside. Otherwise, if you can stay away from it for a day or so, just stay away. Because right now I'm not seeing a sign of bullishness, but it's above 200 hours moving average. It's above 20 days moving average as well. So if it can wanna be choppy, it can be choppy. Netflix tried to go up today, but then sold off underneath of 20 days moving average. And I think it's gonna, again, it's not bullish, but I think it's gonna do a lot of choppiness and struggle here between 20 and 200 days moving average, in my opinion. And the next move will be defined quite a big one, either above 20 or below 200 at this point, in my opinion. Until then, just trade intraday between 20 and 200. And on the hourly interval, you can see rejected at 200 hours moving average. So this rebound came all the way to 200 hours moving average, and then it just rejected over there. And it just completely gave up, completely sold off here, right? And yeah, it's not looking good as well. I mean, if tomorrow if it holds 605, it can try to rebound to 615. But and in the post market also, it's selling off. And if it loses this 605 just downside, and if it rejects even at 600 and 600 intraday, it can still stay weak. Just remember, overall structure is not bullish on this thing. It's still bearish. It's just rebounds happened and now they're selling off. Google continues to stay in the downtrend, and the structure, I said it's going to stay downtrend as long as we're below 164. Rebound came and it's still being sold off there. Google is not bullish right now. Let's see. Well, the structure would have to change eventually for the upside. Otherwise, no, it's just being shorted at those levels, right? So right now it's also not looking good. Yeah, 200 days moving average, just keep an eye on that. If any support would have to hold or a pivot, this is the area. Otherwise, we are going much lower. Amazon tried to go up, rejected at 200 days moving average, overhead resistance, and market continues to sell off still. and even on the hourly interval is not looking good. Yeah, so right now structure even on intraday is bearish. Yeah, failed to continue higher, and we got to one of those levels in the rebound underneath of 200 days moving average, and I won't be surprised if these markets continues much lower, guys, actually, because structure is breaking everything to the downside now. So it's a market going down, and this is the time if you are looking for 5 or 10 years. This is DCA thing, right? Like, I'm not like, I cover active trading, right? And but if you are also having, because I have portfolios into active trading, day trading, swing trading, long-term portfolios as well. My advice would be, if for your long-term portfolio, I mean, these are the opportunities you need to be waiting, and with a 5 to 10 years of horizon, if you can get these companies at a cheaper price, just DCA into it over the long run. Like, just have a long-term portfolio on the side. Keep doing your active trading. I mean, that's what teaches you how to trade and manage your money and portfolio. And it's your choice. I'm not saying anything what you have to do. You do go and do what you want to do. What I'm saying is that from the long-term perspective, this is where the position, well, not just this is here, but in these structures, when the market is giving you pullback or sell off, is when things feels right. This is the time to get into it, not at the tops here, right, for the long term. All right, that's it for this video, and if you found it helpful, valuable, please hit the like, subscribe, and I'll see you in my next videos, guys. Bye.